Good afternoon, everyone. Welcome back to another video. It's been a long time since I made a video for you, and you all know that you have been tracking my analysis and data over the Telegram as well as on Twitter. Right now, I'm back. I'm back with a big reveal for you guys, and also let's quickly look at the deep dive analysis of what is happening in the markets. Back when I took a break in May, many of you shared very good messages, wonderful, heartfelt messages, and I'm thankful for that. Our community has been growing a lot, and it's all because of you. And I'll continue to post all my videos and analysis for you guys. Hopefully, you guys take a lot of benefit from it, and you can always contact me. I have shared my contact details in the Telegram group. Right, the link is in the description box. Have a look at it. Now, a very important discussion we're going to have is about volume analysis. Okay. So volume analysis is something which 99% of the retailers don't know. What is actually happening in the market? Who is the buyer? Who is the seller? Now, regardless, you put a name to it. You can put a name for the buyer as retail. You can call them foreign institutional investors. You can call them domestic institutional investors. That does not matter to us. There is a buyer, there is a seller, right? What have they done and at what level have they transacted, right? That is what we want to understand. Now, recently we had our election results, right? So including the election results, volatility, what else are we going to discuss? We're going to discuss the previous structure in the market in Nifty, what is going to happen, possible path, that is your next possible path, using Elliot wave analysis, that is your price analysis. We'll discuss that. We'll discuss some time analysis, okay, for the upcoming month. What are the key dates and what is the time cycle indicating which side the market might move? We'll discuss that. And also, which I told you before, we're going to discuss volume analysis. So let's begin with Nifty, the deep analysis, which we're going to start. Again, if you don't know Elliott wave, it does not matter, right? There's the market course, Elliott wave market structure course, which is online on YouTube. It's the link is in the description. It's available in Hindi, Tamil, Telugu, and English. So have a look at it. You will understand what I'm telling you. Again, if you're watching this video for the first time, let me tell you, this video is not for beginners. Okay. We need some knowledge of market structure so that you can easily understand what I'm trying to tell you. But if you're watching this for the first time, you just watch it with an open mind. There's some things which you will understand, something which you won't. Right now, keep an open mind so that later you will understand better. All right. So daily time frame, Nifty. Everyone is expecting this to be a wave 4, correct? Everyone in the market, all your analysts are suggesting that this is your wave 1, all the way from here, which is around 16,800. This is your wave 1, your wave 2, wave 3, a sharp drop, wave 4, and now we're going for a wave 5. There are two scenarios here, very important. There are two scenarios. This might not be your wave 4. Okay, this might not be your wave 4. This, as per my indicators, whatever study I have, this is your 3.4 so far. Only and only if the market goes sideways here. Okay, if the market goes sideways like this, making a flat pattern. Now, what is a ABC flat? What is an irregular flat? All this have been discussed already in the Elliott Wave Master Course. Have a look at it. It'll be easy for you. I've explained it very easily. Okay, so learn from that and come back to this video and watch it again. All right. So far, this bounce which has come in the market, it is only a 3.4 wave from here. So your wave 1, wave 2, this is your wave 3, which is going on. In that wave 3, this is a 3.4, and now we're going for a 3.5 wave. This is the primary count unless it drops back to form a irregular pattern. If it forms an irregular pattern, I will come and update it to you that this is not a 3.4, it is a wave 4. Very simple. I think 90% of your questions, queries, which I have in my WhatsApp have been cleared. All right. We'll discuss the volume analysis first. And you already know a very important figure in our financial influence space is Anuj Singhal. He's a TV anchor, financial TV anchor, and he posted this on the 8th of June. He posted an important data. What does this data tell you? First, we'll decode this also. So according to this data which he shared on 3rd of June, right, on 3rd of June, which is your exit poll result, the reaction we had, a huge gap up. All right, let me show it to you. We had a huge gap up in the market, right? A big gap up around, let me see, 600 plus points, 650 plus points. We had a huge gap up that day on Monday, June 3rd. So according to the data he shared that day, okay, on that day, the retailers were net sellers in the market. Now, we don't know whether this is end of day data or this is carry forward data, right? Or was it the net transaction on that day, right? So the net of primary action of the retailers was they were net sellers. So FPIs, the foreign portfolio investors, were net buyers, including mutual funds, PMS, and so on. On 4th, the day of the results, correct? The day of the results, we saw huge fall in the market, nearly 2,000 points intraday. On that day, the retail was net buyers by 21,000 crore. Retail was net buyers that day. So it looks like the retailers have become smart, right? It sounds like that. Let me tell you, we'll have a look at the market through the lens of volume analysis. And that's something, again, which you have never seen before, many of you. And you can also learn this. I'm also learning it from YouTube. There are multiple courses, right? Everyone in abroad uses it a lot. In India, it's not very common because everyone is stuck behind strategies and buy, sell, tip signals. No one wants to learn. But here we'll discuss that. We'll discuss volume analysis and we will verify this data. Okay. So right now, 3rd of June, let's quickly go to a 5-minute chart of volume analysis. It might look new to you. Don't worry about it. I'll explain it to you how it looks like. So let's go on 3rd of June to a 5-minute chart of NIFTY using volume analysis. Okay. So this is your chart. You can see there's a candle in between, right? So this is your candle, the red color candle, 3rd June, first candle. On the left side of it is the net sellers volume, right, of the candle. On the right side of it is the net buyers volume. Okay, net sellers and net buyers. So usually what happens at any price level, there has to be a seller and there has to be a buyer, right? So that's when a transaction happens, right? Now, if you see the remaining candles of that day, we know that it went sideways. The market went sideways that day after a huge selling, and the entire day we were stuck in the internal range of the big candle. All right. So as per the data which came that day, which was shared by Anuj Ji, that retail was net sellers by 8,500 crores. Let's have a look at the chart. This was the open of that day. Okay. This is your open. The price opened at 23,330 level, nearly 340 level, right? Since that moment, you can see since that moment, there was complete net selling in the market. There was no buyer here at this level. It's all zero. Price was completely pushed down within the first candle itself. Huge volume of selling. This is 582,000. Okay, 582,000. Okay, so that's 5 lakh approximately. Each bit of price, right? There's so much volume. Uniform volume means somebody has hit the sell button as soon as the market opened. There was supposed to be very good volume, liquidity on the buyer side so that the seller can sell. But as soon as the market opened, there was a sharp decline in the market because there was only sellers in the market. And this is not done by retail traders. Why? Because retail does not have the power to push down the market like this. Okay. If the market has been pushed like that, it should be retested the same day. So in smart money concepts, what do you call this? You call this an inefficient delivery. Okay, all this is new to you guys. I'm telling you, just listen to it and we'll verify the data. That's all. Okay. Right now, there was net sellers in the first candle. And let's come back to the first candle story after the selling stopped over here, right? Here, there was equal amount of transactions in this region. This is called your value area. Okay, this is just a value area. If you look at this completely, market was stuck in this entire zone. For the entire day, it was stuck. Then it moved higher to retest the selling pressure which came in the market. It went up to retest this selling pressure which came in the markets. Okay, so this is the story of what really happened. Now, how do we know in the live market who is the buyer or seller? Okay, who is the buyer or seller? We don't know. So the story so far based on the data is that there was net selling in the market on your third of the buyers, that is your retail traders, net sold here. Okay, always remember that if retail traders have taken a huge action, price will go opposite to it. Okay, price will go always opposite to it. Suppose retail are net sellers. Okay, price will always go opposite to it, or temporarily it will go in the same direction to bring in more retail traders. Okay, and then it will reverse and completely finish off the entire sellers here. Since retail is seller, price will go back up again. That should be understood clearly. Okay, now on 4th, as per the data, on 4th, retail was net buyers. So right now, what do people think? People think that price is gone up. So it's because of retail traders. This is what is the narrative. Okay, it's because of the retail traders the price has gone up. What if I tell you that we are in a fifth wave? What did I tell you before? We are either in a 3.4 and going for a fifth wave. Now, match the data with your Elliot wave analysis. Very simple. Who participates in the fifth wave? Is it retailers or is it the institutional investors? Very simple. We know that retailers, they buy chunk, handful, loadful, pocketful, jo bhi ho. They buy a lot in the fifth wave without knowledge that we are going for a deeper correction in the next leg or the next phase of the market, right? The data is matching, right? The data is matching now. If you tell me that this up move is because of the retail. Recently, I posted in the Telegram group regarding your smaller time frame where there is a buyer who is booking his longs. Okay, through the volume analysis, I told you there is a buyer who is booking his longs. You can see there's a green candle, but the net delta. Now, what is the delta meaning? It means the difference between the buyer number of buyers and number of sellers. Okay, there is a negative delta on this green candle where it moved very fast up, meaning there's a net seller here. Somebody or the buyer has sold something. Why didn't the market fall? It didn't fall because it was only a part booking. Okay, when you know there's a negative delta, again, this is something new for all of you guys. Just listen to it and we will move back into a price structure and time analysis. Just listen to it. It's very important. As we move higher, you can see that there's another net delta with huge volume. Price moved higher, then why is it net? It should be green like this, right? It should be green candle and green delta, meaning more buyers are there. But there is a negative delta here. Again, there is a negative delta here. Okay, meaning the buyer, as the market is moving higher, he is booking his profits on the anticipation that there is some selling going to come in. Okay, very, very simple. Let's quickly look at an example of this same concept which I'm sharing before. What happened. This is a daily chart of Nifty again. Yes. We had a low on 13th of April. This is 13th of May approximately. Yeah, 13th of May, right? The next day, a green candle. Good. After that, what happened? This is good volumes, right? Buyer is defending this area. Now, there's another good doji reversal here. Again, green delta, very good. What happens the next day? There's another green candle, but there's negative delta, meaning somebody has sold. Another sideways price action. Market does not fall, right? If the buyer has sold, people think it should fall immediately. It has not fallen, right? It has gone sideways, meaning only part booking has happened. Now, same thing, we go a few days later, another green candle with negative delta. Another bit of part booking. Suddenly, market goes higher. Obviously, this huge candle has come. And there are some concepts of imbalance and rebalance, which I won't go in this in detail, but just to give you an idea, there's another booking happening. Price market has closed the candle in green at a higher level, negative delta. So negative delta everywhere. Somebody is booking their price. The very next day, what happens? Market gives a red candle with huge delta on the sellers. The next day, 5 times the volume, right? Market falls. But these 3 days, when the market was falling down, these 3 days, what was happening? There was a net buyer in the market. Can you see this? Red color candle, but green delta, meaning there's net buyers everywhere. So again, net buyers does not mean the market should turn around the next day. It can turn around when it happens, but for us, we know market structure. That's why we know when it can happen. But from volume analysis, what does it tell us? There is someone who is supporting the market. So where does it come back to? Where does this price come back to? Remember this first candle where the buyer was booking profit, it came back exactly there, right? It came back exactly there. 2 candles here absorbed the selling, and then we had a huge buying here. Now, coming to the 3rd of June, what is the color of this? It's red color candle. Delta is green. What does this mean? There was huge selling pressure. There were net buyers in the market. Okay. And market price action was toppish. Why? Buyers are there. Candle is green. Should it not go up? Right? Green color candle, green color delta meaning net buyers, market should go higher. But there was a red candle with delta green. This is not matching. Market falls the next day. So as per the data which was shared to us, right, retailers were net sellers on that day. What really happened on that day? You saw this huge selling pressure. Okay. Then what happened? There was net buying happening here. Okay. There were net buyers. There were buyers trapped in the market over there. The next day, again, huge selling pressure in the market. Red color candle, massive candle. What was the delta? Net buyers again. Okay, understand this, very important. There was net buying again happening. But on that day, what happened? There was June 4th, retail was net buyers. Before that, they were net sellers, then net buyers. So is there the same context which you guys are being reading all over the internet? FII selling, FII buying, retail doing this. Is it matching with your volume analysis? It is not matching. There's no sync in it. Okay. Question is, what do we believe? It's very simple. You're learning buying and selling pressure. These are the points where buying and selling pressure happened in the market in huge quantity. Okay. Now these blue areas, okay, these blues areas are the areas where I told you that price will come and retest this point if the sellers come in the market. Big boy bears, this is the term I use. Big boy bears, when they come to play, they will come and retest this point. Why? If there are any retail traders who have taken longs or in investment or trading, FNO, whatever, price will 100% come back here and retest it. I'll tell you why. Let me go to a weekly time frame. Same thing, there's no difference. This was the point where you saw price come on 4th and bounce from here. What happened here before? What happened here? This is called point of control, right? What actually happened here? You see, this was a red candle and a red delta. Meaning what? On a red candle day, there was net sellers in the market. It should go down, correct? It should usually go down. But then the very next day, market turned around higher. Okay. It turned around higher and it never tested this point again. It never tested this point, meaning there are sellers trapped. There are sellers trapped in the market to check the bullish pressure. So the bulls have trapped the sellers here to check the level again, to check the power of the bulls. Market came down fast on a single day, covering 3 months of price action and tested the same level. Bulls came back to the rescue at this level. Okay, bulls came back to the rescue at this level. Now, question remains the same. Who is the buyer and seller? If the net buyer at this level is retail, then this price level will 100% come and break. Now, why do I say that with some confidence? Because same manner where this level was tested and these kind of levels 100% test, there's another level below it, just below it, which is your 20,900 level to 21,000 level. This is 870 to 21,000 level. This is not yet retested. This has to be retested. And this is what I shared in the Telegram group. These levels will be retested. I put it on Twitter as well, saying that these levels will be retested again. But there's a flow to it. It does not come in a single day. This is a single time event, once in 5 years. Again, there could be a scam behind it. So may not be, whatever it may be. We are not interested in that. We are interested in levels and what the market is doing. So in between, there are a few shorter levels where market has to test the bulls. Okay. If the bulls are your retailers, then this market will 100% come back down to 21,000 and below. You can note that, you can record this, you can take a screenshot, whatever you want, it will come back here. Okay. Now, let's get back to our price and time analysis, to the market structure. What's happening here? Before that, let's quickly look at the events which is coming next week, which we need to keep tracking. As in, we are not interested in the news which comes out. We already know news can be manipulated. It has nothing to do with us, our levels. We need to know the date it's coming out. So this is trading economics, the calendar option category. You can go there and see what are the upcoming key news events. Okay, so on Monday, 10th of June, we don't have anything for India. US also nothing much major. All these red highlighted, right? These are red folder news, meaning important news events. So for India on 11th June, nothing important. US, nothing important again. On 12th June, Wednesday, Great Britain GDP, not interested. Okay, we have inflation data coming out on 12th. Okay, for India, that is important for us. Again, the data itself is not important. Whatever the number comes, we know the big boys like to manipulate or create volatility during that time. Okay, the same day, On 12th, we have core inflation data of US coming out, as well as the inflation rate month over month. In the evening, Fed interest rate decision. This is huge. This is major. Again, why does it affect us? We are not in US, because the interest rate decisions in Fed affects the Dixie. This is your dollar index. Major companies in India have businesses all over the world which are affected by the fluctuation in dollar price, right? Next, it affects the bond yields. So this bonds affect the emerging markets like India, right? Cost of doing business and transactions, so and so, so and so. So the data itself is not relevant to us, regardless of what happens to bonds or not. For us, market structure is important, and we know it's going to be a volatile day. That is all. Okay, that is why we look at the data coming forward. And after 12th June, that's your Wednesday, there's nothing much important, I think. Nothing. Initial jobless claim is not important for us. Wholesale price index, right? Inflation. So that comes on Friday. So Friday, again, it's important for us. The 2 days out of next 2 weeks have major news events. So we'll keep tracking that, and we'll keep tracking the structure there. The structure of the market from your 21,000, which people are getting confused now. First, in the beginning of the video, what did I tell you? I told you a very simple thing. This cannot be your wave 4. Now, it might be a shock to many people, and this is your wave 3.4 or wave 4 only if we get a flat ABC. I don't know if you can understand this. Very simple. So if the market goes higher right now, if the market goes higher, non-stop rally, then it is not going to be a flat ABC, right? In a flat ABC, we have irregular flats, expanded flats, running flat. It will come back down like this, right? This can be a what if the high breaks. This is your irregular flat structure. Again, check your Elliot Wave Master course. It's there, link in the description. You will clearly understand what I'm talking about. This is one possibility. Only then I will consider this as a wave 4 possibility. Okay. Right now, it's only wave 3.4. Now, 3.4 from where? Right? It is very important we understand the higher time frame structure. So 3.4 from where? So at this point, this is your 16,800. We are taking this as origin. Okay. This is your origin here. Then your wave 1 over here. Your wave 2 around. Why I'm explaining this is because I get all the queries based on this. 90% confusion will go off if you understand this. Your wave 1 here, 2, and now we are in a 3. Okay. If this wave comes back down like this, then I will consider this as a 4th wave and 3 wave completing here. Then we will go for a higher 5th wave. Very simple. I've marked few levels on top: 23,700, 24,000, and 24,843. Remember these levels, mark them in your chart. When they come, we'll discuss that in live market. If market rejects from here, let me tell you, if the market rejects from here, as in touch and reject. We saw this on 3rd, right? We saw some levels on 3rd where the market just touched it and rejected. So you will get an electric reaction from there. You get an electric shock, right? You take your hand off when you touch a live wire, you will get a reaction from these levels like that. That's what happened on 3rd, right? So these are the new levels on the upside. Mark them and keep. Let's go down to a smaller time frame structure. Now, here 90% people are following what? One important structure, suggesting that this is a triangle, right? So all of you are considering this as a triangle, this as a initial part A, B triangle, and C wave. It's not wrong. Let me tell you, it's not wrong, but this is only one of the possibility. Okay, your A, B, C is only one of the possibility. There's another possibility where you have to consider that it's possible this is your wave 1, wave 2, and we are in your wave 3, which is subdividing. All right, we'll discuss that in more detail. For now, we are in a 15-minute chart. What do? We mark using your channel line. I think in the intermediate stage, all of you have learned how to draw a channel line, where to connect, what to connect. All right, I won't repeat it here. So go through the intermediate course again. You'll understand it much clearly. This is your channel line, higher time frame channel line. Very simple. We'll go to a lower time frame now. In your lower time frame, what always happens is people forget there exists a wave on the higher degree. So when you focus, 90% doubts which I get is people with one time frame, one single count, asking me if this is the correct count. Don't do that way. Note the other alternate possibilities. So I don't answer directly. I ask you counter questions to stimulate your thinking. So recently, one gentleman asked me, he's a member, he's been following, he's been studying. He asked me that, isn't this a pump in the market? Right? It can be a pump. If this is a pump, then market has to come down exactly to where it started from. Yes, 100% true. But what is the alternate scenario? So I asked him counter question, why does he think it's a pump? Then he told me he thinks this is an ABC structure. In the ABC structure, he thinks this is a wave C.5. No problem, it's correct. But the only problem is you have to think in a multi-dimensional way. So what you're planning to in Elliott wave is you're thinking 5 steps ahead of the market, right? And you're letting the market confirm the path. You are not deciding the right path. Your market is deciding the right path, which you are following. All right. 90% what happens, I have repeated this a lot, that when the first path gets confirmed, right? Suppose this is your analysis, you have 5 steps. When the first path gets confirmed, 99% of the analysts, the traders, they start trading based on the assumption that this is the correct path. They start trading based on the assumption that this is the correct path. They won't wait for the market to confirm the further steps, because top bottom पकड़ना है, jackpot trade लेना है. ऐसा नहीं होता है. You go through, there's a nice book called Atomic Habits. If you apply that in the markets, where you look for smaller targets multiple times, okay, repeatedly with higher frequency, then you will fulfill your whatever target you have in goal, but you will achieve that. That's much simpler for a retail trader. Okay, the big institutions and whatnot, they follow such methods, but their profit margins targets are huge because they take huge risks. Okay, don't compare yourself with such people. Keep your pocket size, pocket limit in mind when you trade. Okay, now simple hai, structure all the way from here. You see there's a subdivision here. Very simple. I want you to just stop thinking about trading for a second. Look at the structure, what's happening here. Very simple. Up, down, rally. Correct? Same thing happened here. Up, down, rally. Same thing, little bigger. Up, down, big rally. Okay? Again, zoom out. Up, down, bigger rally. So everywhere you're seeing an N pattern like structure, right? This is what I have been telling you from day one. There is always an N pattern for the upside move and a similar pattern for the downside. Now look at the downside structure. Goes down, goes back higher, and falls back down. N pattern. There's another pattern here, same thing, like this, N pattern on the downside. So always there's an N pattern. So question is, how do I know whether the market is going to reverse or not? I've taught you this 38 to 50% zone. Okay, 38 to 50% zone is the zone of continuation. I call it the zone of continuation. So watch that. Now this is only basic knowledge, retracement, expansion, retracement, expansion. Once you understand market structure, where the Elliott wave, wave 1, wave 2, the sub waves, then you will know exactly where to place this retracement. Okay, it is not everywhere you place the retracement, where exactly you have to place the retracement. For example, 38 to 50% was breached on the downside, but then again it sustained and went back higher. So which wave does this kind of action happen? It can happen wave 2 or wave B. Wave B can be any price action, so this can be a wave 2 possible, right? Now question is, yes, it bounced back. Okay, very simple. This is the most important part of this video. Price bounced back from here, correct? Now you can also draw a retracement of this fall. Remember that you can draw a retracement of this fall. So let me tell you, let me show you. This is your retracement of the rise. We mark this level 30 to 50%, right? So below this, we can go short. Above it, if market sustains it, we want confirmation and we can go long. So right now we have this zone. Let's mark the fall. Now question is, market can go higher and again come back down, correct? So what you need to do is very simple. You will draw the retracement of this fall. You will draw the retracement of this fall. Where is the 50 to 38 to 50% zone of this fall? It's over here. Right? So what happened here? Market came down, went higher first price action. It came back down, breached this zone, but did not fall below it. Now you have the question in your mind whether the market is going to rally or it is going into consolidation, or is it going to fall down further. We know that if this price breaks again, it is a clear-cut short. Okay, we know that. Market never came back down to break it. So what did it do? What did the market do then? It went higher. It broke the 30 to 50% of this zone. Now we have a confirmation that this channel line of this price is broken, with the confirmation that 38 to 50% zone is broken. Okay, we know that. So what does the price do then? It goes back higher, comes back down, consolidates, simple breakout, right? Simple breakout, broken the previous 38% zone, sustained above the first rally. So what is this making right now? It's making an N pattern and going higher. We'll discuss this for the current price action. This is what happened before. What can happen now? So this channel line is a higher time frame channel line. Very important. Draw one higher time frame, and suppose you're taking 5-minute chart, right? So make sure you have one channel line of the higher time frame, which is a 15-minute chart. Now you're drawing a 5-minute chart channel line. What are you seeing? The latest wave. Latest wave. Over here, it's very simple. I put a different color, lower time frame. You see one correction happening. Okay, market broke out and went. So what are you doing from this point here? It's a fresh wave, right? 20 to 645. This is a fresh wave in the market. So you're drawing a channel line for that. Okay, you are drawing a channel line for this fresh wave now. Where is it now? What do you need to find out in this fresh wave? You have two important points which I've taught you in the intermediate course. You have the middle channel line of the higher time frame. Okay, then you have the lower channel line of your internal, that is a shorter time frame channel. Okay, there are two different colors. Right now, when the market breaks both of them, what does it give you? It gives you a low risk short opportunity, correct, on the downside. What if right now you see, market structure, and you're seeing this as a wave 1, wave 2, wave 3, right? What happens in wave 4? It comes back down to 38 to 50% correction. We want it to come there. Has it come yet? No. So most likely the next drop is going to be what? A wave 4 on a smaller time frame. Then what comes? A wave 5 comes. After smaller degree wave is finished, what happens? A larger correction comes. In that larger correction, what will happen? Your channel line will break. Simple, very simple. You can practice this. It's the same what has been taught in the intermediate course. I am applying it in the current market scenario. All right. Going forward, what level do we have right now? Just market 23,000 to 22,980. This is your lower level from the current price. Okay. If market comes back here and bounces, we are going for a wave 5 on a smaller time frame from 20 to 645 level from here. That is your wave 1, wave 2, wave 3, wave 4, wave 5. Then we can go for a correction or sideways market. That depends. Now, when you have learned corrections in the market, you know wave 4 is the most dangerous wave of all the waves. Why? Because it can take any shape. Okay, it can take any shape. If it can take any shape, what do? The retail traders get chopped out in this wave. The retail traders get chopped out in this wave. To confirm this analysis, I shared this graphic with you, showing you that some buyer is booking the profit on 22,900 level, 23,000 level, 23,200 level. There is some buyer who's booking his profit. Does it match with your structure now? Does it match with your structure suggesting possible wave 4 drop? Why will the wave 4 drop? When the profit booking is done. Now, there's this concept where shorts happen when red candles come because someone has placed a short order. That's when the market falls. No. The big boys, they sell when the market is rising. Later, the market falls. Okay, that's simple. This is a different concept. It comes under smart money concepts or different, whatever you want to call it. But right now, it's irrelevant. Right now, focus on this. From 22,645, we go down and go back higher, or we break the higher time frame channel. Zooming out. Okay, I'm removing this. You have understood this. On a smaller time frame, what to look at. Let me just keep the higher time frame channel. Yeah. What happens when the higher time frame channel breaks? When the higher time frame channel breaks, like I said, there are two possibilities. What are the two possibilities? That market can make a flat correction here and complete as a wave 4, or else your wave 4 is completed here. This entire rally is sponsored by retail, which is your wave 5, which after it finishes, it will come back down fully, retrace completely. Okay, there are only two options. Okay, so this is your 3.4 going for a wave 3.5, sub wave, fifth wave, or else we are going for a sideways correction in the market. These are the only two options. So for that, you have gone now to a smaller time frame and saw there's a good chance market is not going to fall immediately right now because market is doing this and it is going back higher. Okay. If the market breaks this channel line, simple, you will draw a channel line like this, pull back, look for the end pattern. Okay, simple. Let me show you. Price has broken this channel line, for example, and it will come back higher. Like this, pole and flag, call it, ABC pattern, call it, you want call it whatever you want. Then when this channel breaks, it will go for a selling mode. So in that case, what will happen? This will be your A, B, C. We're going for a C wave down. Simple. Now, time analysis. Using time, we know, I shared this with you guys, 7th or 10th, which is your Monday. I was expecting a short setup in the market, meaning there's a good chance market can go for a small correction phase, right? Match it with your data. What data? On 12th, we have some news events happening, right? So that is an important day, 12th and 13th. As per the normal time cycle, 7th to 13th was a down move cycle. Okay, possible bearish cycle from 7th to 13th. But what happens if market goes sideways? What happens if market goes opposite in direction? Okay, so this is the normal cycle. Inverted cycle. Now I've taught this to you guys, I've said this many times. There's something called inversion, where you expect the market to make a high, right? Where you expect the market to make a high. Suppose this is, let's say, 7th. Okay, where you expect the market to make a high, it makes a low, meaning it has made the opposite price action on the same time. It has become inverted. Okay, this is called time inversion. So if we are following the normal cycle of time cycle, then we will go for a correction next week. Okay, 7th to 13th time was for a time for a correction, and then again rally in the market. What if the opposite happens? What if the opposite happens and market does nothing and makes a high on the 13th? Because it's wave 4, remember? Wave 4, if it comes and does nothing like this, very simple. What it's going to do is it will go sideways. All right, and then on 13th we'll make a high. That is your new cycle date, and then we'll fall later. Very simple. So you understood this. You have a channel line here right now. This breaks, gives you an opportunity. You don't know whether it will break the lower time frame and go like this. Right now, the only data point you have is to wait. If you're a long-term player, it's for you to understand, you have to wait for what happens if this channel line breaks. Okay, so right now this can be a wave 2, 1, 2, and we are in your 3.3 wave. Okay, we are in your 3.3 wave. 1, 2, 3.1, 3.2, 3.3, 3.4, 3.3, 3.1, 3.2, 3.4, and 3.5. Again, this is not your 3.4. This is not your 3.4. I can't explain it on public platform because this is part of advanced concepts. How we found that this is not a fourth wave. This is not a fourth wave. From here, at least, you see a wave 1, wave 2, and here it's still wave 3 going on. This can be your, from this point, it can be 3.5, whatever, but this is not a fourth wave here. Okay, so this is a single move so far. This is a single wave so far. Again, this is part of advanced concepts. I cannot discuss it in the public platform. So you understood how to analyze time, you understood how to analyze price, you understood what's happening in a higher time frame in the market. You know what to look at for the upcoming week. For the upcoming month, like I told you, any reaction from the higher levels in the upcoming months, right? It can be 24,800 also. It can be 24,700 as well. So I expect 23,700 to be tested once. If there's a sharp rejection from it, then like this, we will see a fall in the market. What happened in June 3rd and June 4th, we will see a sharp fall in the market. All right. So right now, don't create bias, because if this is a rally, it's the last leg of the rally. On a higher time frame, like I told you, this is possible fifth wave, but it's a sub wave. It's not a major fifth wave. It is a sub wave. And this matches with the data suggesting that retailers are net buyers here, because that is what they want. That is what the big boys want. Retailers be a buyer in the fifth wave. If this is a fifth wave, then they are happy that retailers are net buyers. People are thinking that retailers have been defeating the FIIs and whatnot. If you remember, FIIs were net short in this. And in the weekend before June 3rd, you saw 80% index shorts. 80% shorts was FIIs. They have 80% carry shorts. Next time market gaps up, who dumps the market? Who wins in the end? Always the FIIs win in the end, correct? So keep that in mind. If this is your fifth wave, this is a part of the third wave only. unless this is your 3.5. We started from here. Okay, so 3.4 completed here, 3.5 ongoing. So above your recent high, it can go for a sideways price action, or we are going for a higher price. So in either case, I marked few higher levels. So we will review our structure over there. If this is a pump, same time market will get dumped. Okay, so right now this is all I have for you guys, and thank you all for watching all this, to the end, to the entire video and towards the end. And if you do like such content, just give me a thumbs up. Also make sure that you are learning. Okay, it's more important that you're learning. Join the Telegram group. I'll provide intraday levels and your updates, what you can practice on day-to-day time frames. So do join and share it with everyone you want to. Thank you guys. I'll see you in another video.